This is your LMAX exchange technical update for Wednesday, March 22nd, 2017. Eurodollar. So the euro has arrived at this critical inflection point where that next big break is going to be a big one. If we see the market establish above 108.75, it will suggest that we're seeing the trigger of an inverse head and shoulders formation on the daily chart, which will project significant upside up towards the 114 to 115 area over the coming days and weeks. At the same time, if the market stalls out up here into this resistance in the 108 area and reverses lower, we could see a resumption of the broader downtrend, which exposes a break back below recent support just under 105 and down towards that 14-year low at 103.41, which guards against the critical parity level further down. Sterling dollar. So cable has seen the market rally back up over the past several days, but we're coming into this critical resistance zone in cable in the 125 area where we could see easily the market stall out here in favor of a resumption of declines back down towards that critical 2017 low at 1987, which guards against the 2016 October multi-year base at 118.41. At this point, the market would need to establish back above 127.75 to negate the overall bearish outlook for cable. Dollar yen. So dollar yen has seen a breakdown below 111.60, which had been defining range support over the past several days. The breakdown below this level is significant as it opens the door potentially for a measured move objective to 107.60 further down. This is after the market had consolidated roughly between 115.60 and 111.60 in that 400-point range for several days. So again, the breakdown here suggests a measured move equal to 400 points to the downside, opening exposure to 107.60. At this point, a daily close below 111.60 will help to strengthen that bearish outlook for dollar yen. Euro Swiss. So Euro Swiss continues to be very well capped into rallies with the market confined to a broader downtrend, and a lower top is now sought out at 108.26 by that recent high ahead of the next major downside extension to be confirmed on a break below the 2016 base at 106.24, which will expose a test of psychological barriers at 105 further down. Aussie dollar. So Aussie has seen the market stall out yet again above 77, with the market into critical resistance up towards the 78 area. At this point, deeper setbacks are favored, with the market seen accelerating back towards initial support, which comes in at 74.92, with a break below there to potentially accelerate declines down towards the psychological barrier at 70. Only back above 77.50 would delay this outlook, while ultimately the market would be required to establish above 78 to force a more significant structural shift. Dollar CAD. So dollar CAD has been consolidating recent declines, but overall here the structure is quite constructive, and setbacks should continue to be very well supported in favor of an eventual upside extension back above the recent multi-day peak at 136 and towards the 140 area further up. Only back below 29.69, that low that we'd seen this year, just under 130 at 29.69, going back to the 31st of January, would compromise this outlook. Kiwi dollar. So Kiwi has been very well capped into rallies over the past several months, stalling out in 2017 ahead of 74, and this current bounce that we're seeing should be very well capped in favor of a lower top, ideally ahead of 72, ahead of that next downside extension back below key medium-term support at 68.62, which could then expose an acceleration towards 65 further down. SPX 500. The S&P 500 has seen a critical breakdown in recent trade, with the market taking out psychological level and some support in the form of that low going back to the 24th of February at 23.50. The break and close below 23.50 suggests that we're finally seeing some form of a top here, which could open the door for an acceleration of declines over the coming sessions towards 23.05, which is a critical previous resistance now turned support zone. At this point, any rallies that we see should be very well capped ahead of 23.75. Gold. So gold continues with its constructive outlook as it shows signs of higher lows and higher highs after basing out in 2016 ahead of 1100. This latest push higher after the market bounced out from the 1200 area suggests that we're seeing a higher low now around 1200 in favor of that next upside extension beyond 1265, which will open a measured move well beyond 1300 in the days ahead. Only back below 1180 would compromise the constructive outlook for gold.